If you run a business, you know all about the importance of cash flow, and it seems HMRC and the Treasury do too. In the autumn statement, we were made aware of the fact that they were looking to get tax earlier if an individual had adopted a scheme that had failed in the courts or tribunal. For example, say the Gary Barlow icebreaker scheme has failed in the upper tribunal. If you were an individual who had adopted that kind of scheme, even though your appeal had not yet been carried through to conclusion, you would be issued with a follower notice and would have to pay the tax at risk in the view of HMRC within 90 days of receipt of that notice. So they get their tax earlier. The budget took that a stage further. They've proposed, and it's in the finance bill now, that, I'm just going to read from the summary here, legislation will be introduced in the Finance Bill 2014 to enable HMRC to issue a so-called notice to pay to any taxpayer for whom there's an open inquiry or the matter is under appeal and who has claimed a tax advantage by the use of arrangements that fall to be disclosed under the Disclosure of Tax Avoidance Schemes provisions, the DOTAS provisions, so the scheme that you have has a DOTAS number, or where HMRC has counteracted the scheme under the General Anti-Abuse Rule, the GAR, following an opinion of the GAR Advisory Panel that, in the panel's opinion, the arrangements are not a reasonable course of action. Now, if you receive this notice, this will require you, the taxpayer, to pay the tax in dispute within 90 days, or a further 30 days, where the taxpayer requests that HMRC should reconsider the amount of the payment notice. So all of these three provisions enable the revenue to gather in their tax early. And if it turns out, it transpires in your particular case that you shouldn't have paid the tax, that your scheme is successful, then they will pay you back the tax with interest. But the point is, they've had the tax rather than you've had the tax for that period while the case is decided. Now, they've taken that a step further, because it's one thing issuing notices to get tax, it's another thing actually getting the tax. And in a very connected provision, there's a consultation that's been going on that has commenced, and you may well have seen this in the press because it was fairly well reported, where HMRC proposed to have the power to go directly into your bank account if you owe tax of more than £1,000 and it's been long outstanding. Basically, they've issued 4 notices to pay, 4 reminders, and the tax hasn't been paid. If the tax is more than £1,000, if your bank account is left with at least £5,000 in it, and the definition of account here, it's important, is not only your account, it's joint accounts and also even ISA accounts that they can dip into and take the money outstanding directly. So that's any tax outstanding. There's been understandably some consternation about this, and some very strong representations will be made through the consultation that this is a very dangerous provision to put in the hands of HMRC because they're not unknown to make mistakes. So all of these provisions are quite important. They think that last provision is going to affect around 17,000 people a year. Your clients will definitely be interested in that, and so it's well worth you being aware of just what this proposal is about, what the conditions are and how it's likely to work, and to keep an eye on the consultation as it unfolds. Now, we have a lot more detail on the exact provisions within our TechLink bulletin, so I'd certainly recommend that you go there and have a look so that you're fully appraised of these provisions when you talk about them with your clients, because they will inevitably ask you about them.